So every business is subject to risk of unforeseeable changes in business environment. Okay, so business is risky, so there is always, uncertainty in the business. Volatility in exchange rates affect your business growth and can be significant. If you are an exporter, importer, or have foreign currency loans, you are directly exposed to exchange rate fluctuation. It is possible to mitigate these risks by using suitable hedging instrument. Okay, so we have done forward. So today we are going to talk about futures. Okay, so currency derivatives are future and options contracts traded on the exchanges, similar to stock, future and options. So we'll go to the stock exchange also. Okay, so have you gone to future and options market earlier, or done some kind of a this thing? Little bit. No. Okay. However, the underlying assets. Now, when you are doing in future and options stock market, then the underlying would be a share like Reliance or Hero MotoCorp or Infosys or any company. But when you're going into a currency future market, then the underlying assets are basically currency pairs. Like for example, USD INR. So transaction can happen between USD and rupee, or Euro INR, Japanese INR, and Great Britain INR, rather than stock. So these are basically, very, contracts which are underlying in futures contract. So futures contracts in US and USD INR, Euro INR, Great Britain INR, and Japanese INR. Okay, so these are the four major currencies which are traded on the stock exchange. Okay, so if you have exposure in any other currency, you can't directly trade in the stock exchange. So these are the major one which constitutes the major part of our currency transactions. So maximum 12-month contracts are there. So every month there will be a contract. Okay, for example, now we are in the month of February, so there will be a contract for February, March, April, May, June, like this. Suppose we have to make a payment or we are going to get a payment, so we have to just go to that contract month. Other contracts are of no relevance to us. Suppose we have to make a payment in the month of August, so we'll go to the August month contract and see what is happening there. And I'll just show you how. Okay. Then, of course, there are 12 monthly contracts, but recently, about a year back, the stock exchange has also started only for USD INR weekly contracts, because USD INR is more frequently traded, so they are weekly contracts. They expire every week. Okay, fine. So 11 serial weekly cycle, expiring excluding expiry week, where the monthly contract expires on Friday, and 12-month trading cycle. So that means all those contracts, they expire on every Friday. Monthly contract, last Friday of the month. Fine. When you go to the stock exchange, so you take positions. Okay, and you can take a monthly position. Like suppose I have to make a payment in the month of, say, July. So I'll go to July, and that July contract will expire on the last Friday of July. Okay, suppose it happens to be 27th of July, so that will expire. So you'll understand what does that mean. Okay, fine. Last trading day. All weekly expiry contracts will expire on Friday of the expiry week. Okay. All contracts other than weekly will expire 2 working days prior to the last business day of the expiry month. Suppose it happens to be a monthly contract, so we'll just focus more on a monthly contract rather than a weekly in our example. So they close 2 days prior to the month. Okay, like suppose it is a 30th month, so it will be 30th and 29th and 28th they'll expire. Okay, at 12:30 p.m. Okay. Now, contract size, because it's a standardized market, stock exchange, it will be, in terms of lot size. So the lot size of dollars is 1,000. Okay, USD INR pair lot size. Similarly, for euro, the lot size is 1,000 euros. So anybody has to take a position that has to be taken in the multiples of $1,000 or $2,000 or $5,000. Okay, like this. Fine. So 100 pound, 1,000 pounds in Great Britain INR. So this is a lot size. Then for yen, the lot size is 1 lakh yen. Okay, except yen, all other are 1,000. Japanese yen is 1 lakh. So when you enter into a trade, you have to pay some money. That's called margin money. Okay. Suppose I want to buy dollars in the month of, say, July. So I go to the market and buy it. Okay. So before I buy, I enter into a contract. Okay. So I'll not get the dollars. So I have to initiate an order. So for the order value, whatever it is, suppose it's like, I'm buying $1,000 and today the dollar price is say 83. So it becomes 83 lakh rupees. On 83 lakhs, I have to pay a margin. The margins of two types, span margin and exposure margin. Okay. I'll tell you what is that. Usually the span is about 2% and exposure is around 0.5%. Roughly you have to pay 2.5% of the order value. Okay, like suppose it is 83 lakhs, uska 2.5% आपको जमा कराना पड़ेगा before you enter into a trade. Now, span margin is basically a software which calculates, because somebody who's trading, either he can lose or he can make money. Okay, so it covers maximum, 99% chance of one day loss, which can maximum loss which can happen to a person. That amount of margin is taken from the person who is taking a position, so that the deal is, he enough margin has been deposited. Okay, suppose he loses the money, so the margin is there to take care of the trade. Okay, this is just to make the trade foolproof or without any backing or any problem with this thing. So all the trades are carried out and they're executed without any failure of the contracts. Okay. Now, how the settlement happens? So expiry, last 2 days prior to the month, there is an expiry, which generally happens, 2 days before the month closes. So RBI reference rate on the date of final settlement. What is the RBI rate? RBI will publish the rate of dollar, euro, Japanese yen. So that rate will be counted for closing the position. Okay, fine. Whether you are making money, profit, or you are losing money, so RBI reference rate becomes the rate for how much money you have made. Now, when you are buying, a currency in the futures market, you don't get dollars. I have bought dollars, but I won't get dollars. I will get only either a profit or loss. All the currency transactions are cash settled. Okay, so that's why the RBI rate is very important. Okay, to determine how much profit I have made or how much loss I have made. Okay, so the closing, the RBI price, whatever is a spot price which is published by RBI becomes the day price at which the transaction will be settled. Now let's understand. Okay, अभी आपको सुनो, आपको समझ में आ जाएगा. Because now we are doing an example. So just hold on with the thought. And if you don't follow, then in example, if you don't follow, ask me questions. Okay, fine. So we have yet begun. It was a theory. So maybe, it's not gone down well in your mind. But now with an example, everything will fall and you will understand what it is. Okay. So example of hedging using currency futures for importer. Now, suppose you are an importer. Okay. Instead of going to the forward market and buying dollars from a bank, okay, who will going to deliver dollars to you? Physically, he'll give the dollars. Here, you don't get the dollars. Okay, so you are an importer. Okay, so you can go to the futures market. Fine. Normally, like in the futures market, the transactions are much. I mean, they are manifold compared to what they are in forward market. Like a forward market is a retail market, and futures market is a wholesale market. So a lot of people are transacting because there are speculators as well as hedgers. Now, suppose I'm an importer, I'm a hedger. Okay, if I'm an exporter, I'm still a hedger, or I can even speculate in dollars. So, almost like 90% or 98% people who are present in the stock exchange, they are just the speculators. Okay, only 2% people who are actually importers or who have some underlying transaction. They want to hedge that transaction. Okay, so it becomes a very deep market. Okay, like suppose if you go to the wholesale market, you will find the rate is quite cheaper compared to what it is there in a retail market. So it's always better to go to the futures market if you have to cover your exposure. It's advisable, instead of going to the forward market, which is not very deep market, okay, you go to the futures market, you will get a better deal from there. Okay, suppose you are an importer. Now, as an importer, you would like to buy dollar, isn't it? You want to buy dollar. So let's understand that. XYZ is an importer. Is that okay? On 29th of January 2024, just recently, XYZ Limited wished to book its outward remittance for 27th February 2024 worth 1 lakh. That means he is supposed to make a payment of $1 lakh when on 27th of February. Okay. Now there is a importer whose payment is going to fall due to a supplier on 27th February 2024. How much? 1 lakh dollar. So he on 29th of January, he went to the market. Okay, fine. Today is what? 2nd of February. You know, so on 20, just a couple of days back, he went to the market and then he opened the stock exchange. He went to the National Stock Exchange on 29th of January 2024. Dollar future is trading at 83.2275. They are always trading up to 4 decimal places. So he found that if he went to the February month, where the expiry is going to happen on the 2 days before the month, which happens to be 27th of February. So I've chosen the date, so it is exactly reconciling or getting this thing with the date of payment. Now it can be different, but just to make the example simple, so he has to make the payment on 27th, and the expiry also happens on 27th of February. So he went to the futures market. Okay, he wanted to buy a dollar. So he found that the dollar was trading at 83.2275. The word LTP is their last trading price. Somebody has traded, when into the market, he saw, the last traded price was 83.2275. Okay, some person has placed the order and he had done a contract at 83.2, or maybe, many people who have contracted on that day, the rate was just at that point of time, the rate is 83.2275. It will keep changing. If I go after 1 minute, the rate may be 83.222300 also. It moves by 25 basis point. Okay, tick size is 0.25. We'll understand that. So that means the lot size of dollar is how much? 1,000. So that means how many contracts he has to take a position? 100 contracts, because 1 lakh divided by $1,000. So that means he has to take a position in 100 lots, 100 contracts. Is that okay? What he'll do, he will buy dollars. He has to buy. So he's going to buy currency futures, 100 contracts at $1 is equal to 83.2275. Now he can choose his price. When he goes to the market, so there will be a window. You can put a price, a limit price, or you can say market price. So you have two options. When you buy a stock also, suppose you're buying Reliance or you're buying, Adani or any company. So when you go to the market, you just have to put, they'll say this is the market price of Reliance. So either put a limit or say market. So when you say market, so whatever is the price at which Reliance trading, they'll get you the price, Reliance. But if you put a price of Reliance, then you will not, chances are that you can buy it only at that price, neither below or nor more. Okay, that's a limit. So it can be even at lower price, but of course it cannot go more than the price which you have fixed. So the chances are that you will not buy expensive. Okay, so always better is that you choose the limit option. I'll just show you the stock exchange. Okay, fine. Now he has bought currency futures. Okay, fine. So that means he has taken a long position. In this market, we say that he has gone long on dollars. Okay, fine. So whatever is a position in your real underlying position, that means I am an importer, I need dollars, I don't have dollars. So I'm short on dollars. So you have to take an opposite position in the market. Take a long position. Okay. No. I'll tell you. I'll explain you that. Just hold on with that. Okay. So you have taken a long position. That means you're expecting the dollar price to go up. Okay. And you will make money if the dollar price goes up. Okay. But in your import transaction, you're going to lose money. Fine. If the dollar price goes up, you have to pay at a higher price. But in this case, you have taken a long position, just the opposite position what you have in your real market, this thing. So you have to take the opposite position. Okay. In dollars. In dollars. So you have to take a long position in dollars. Okay. I'm just marking my word that it had to take a long position in dollars. Okay. I'll explain you why I'm saying so little later. I don't want to confuse you. He's just on a computer laptop. He has just opened the terminal and he's just dealing on 29th of January. Okay, fine. I'll just show you now also what is happening. So he has to pay a margin money, which is currently 2.25%. Though I explained it was 2.5%, but nowadays it is 2.25%. Okay. So he pays 1,87,520.63 as margin money. He has to deposit. The moment he takes a position, suppose he buys and his order gets executed at 83.2275, before it gets executed, he has to pay the margin money. Okay. He pays the margin money. So when he does that, somebody is actually, he is buying, somebody is selling. Somebody has accepted his order. So there are always two people, buyers and sellers. So on the other front, there is someone, who wants to sell dollars on that day. Okay, so there are a lot of people in the market which will be there. Some are buyers and some are sellers. So he has bought it and somebody has sold. Okay, fine. Now, the spot price on 29th of January was 83.14. So please focus here. It's very important. So don't look here and there. Just focus here. Okay, otherwise you will miss out what I say. Today, the price of dollar is, that is 29th of January, the spot price is 83.1450. The future price will be always more because the dollar always appreciates normally. It may happen that dollar is always will be expensive in the futures market. So dollar is trading at what? 83.2275, whereas the spot price is 83.450. Okay. So he knows that, I mean, the price is, it's not like 85, 86, so he can buy it. Okay. So that, when he buys it, so he's at peace. He has hedged his position. Okay. So now, so this is a screen. I'll take you to the stock exchange. Okay. I'll just take you to the stock exchange straight away. So this is the stock exchange. So we go to the currency market. Here is the currency market. Otherwise, we can go to stock market also. So we are going to currency. So I'm just saying place order. So I am an importer. I want to place an order. So here, there will be national stock exchanges there. Futures is there. So I'll go to futures. Otherwise, you have options also. So I'll have to click futures. Okay. Then I say USD INR. Okay. The moment I say USD INR, I can select a contract. Of course, it's giving me all the contracts. Okay. Fine. So, but I'll go to the contract. Fine. So here, these contracts are available. So today the spot price is 82.85. Fine. The price has gone up or gone down? Gone down. Okay. It was 83 point something. So between a couple of days, the dollar has actually, the rupee has appreciated and dollar has depreciated in the last couple of days. After the budget, there's a steep fall in the listing. Now, expiry date, 9th of February. LTP, this is the last trading price. So I can just go down below. So I'll have various contracts for various months. Okay. See, I told you there are 12 monthly contracts and some weekly contracts. Okay. Suppose I have to make a payment. When I am making a payment? On 27th of February. Okay. Fine. So I'll look into this. I'm not, I can book for March. I can book for April. I can book for May, June, July, August, September, October, November, December. So there are 12 monthly contracts. And in between, for the first few months, there are weekly contracts also. So just ignore the weekly contract. Look at the monthly contracts. Okay. So 9 February is a weekly contract. I'm not worried about that. 16 February is another weekly contract between USD INR. Okay. 23rd February, another weekly contract. 27th February is the monthly contract which is expiring for the month of February. Okay. So I have to make a payment when? 27th of February, isn't it? So the price is 82.9175. The moment I was clicking, the price has changed also. Okay. Now I can either buy or sell dollars. Okay. I say I want to buy dollars on 27. So I'll press this buy. Okay. So this window will pop up. And the contract, this will be the contract name. Okay. So when I am going to enter into a contract, a name will be given. Contract name will be given. It will be USD INR expiring on 27th February futures. So this is the nomenclature of the contract. Fine. So then I have pressed buy. Okay. And this is the price which is prevailing now. It will be given here. Okay. This is the last traded price of dollar. This price keep changing. Some trading is happening, the price changing. Okay, I'll just show you. Just hold on. Okay. Now I can buy in lots. So I want to buy 100 lots. Okay. Fine. And I can choose this order type, limit or market. I can say market. So if I the limit, price will go off. If I say limit, then I have to press this price. Okay. 82. By default, it will give me the price which is there, which is last traded price. So I say last. Suppose I think the dollar is going to go down further. So I can even place the order at 91.00. I can put any price I want. If I think the price is going to fall further and rupee is going to appreciate further, fine, based on my technical analysis. So that हाँ जी हाँ 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 अभी अभी स्पॉट रेट ऊपर चल रहा है अभी I'll just show you the spot rate. Okay, fine. So we have seen the spot rate which is slightly lower. Okay, and the future price will be always higher normally. Okay, with the currency which always trade at premium like dollar will be always more. Okay, as we have seen in the monthly contracts. So I can choose 100 contracts. I can choose even 1,000 contracts. That will be 1,000 into 1,000. Okay, but I have to make a payment of 1 lakh dollars, so I have to choose 100 contracts. Okay, then I have to pay this margin money, 1,87,082. Okay, so if I choose 10 contracts, the margin will be 18,000. If I'm choosing one contract, the margin will further go down. Then it will be only 1,870. Okay, so since I have to make 1 lakh payment, I'll choose 100 contracts. Okay, fine. Is that clear? Now I can choose, limit price as well as market. It's my wish. Okay. If my view is the dollar is going to further depreciate, so I can choose a lower price, but only at the risk that my order may not get executed immediately. We have to wait for time. If up to 3:30 the price doesn't get, my order will expire. I have to again, next day I have to again go to the market and just place my order again. Okay, fine. Is that okay? Now, this window is very important. Bid and offer. Now, before I place my order, it's always better to see what is happening in the market. How many people are buying and how many are selling. Then I can make my view. Okay. So, last 5 orders of buy and sell, I can see them. Okay. So, I open up this window. So, this window is very important and one must go to this window before you buy a stock or you buy a currency or you buy anything in your life from the stock exchange. Okay. So you will have, best bid. So that means there is a person who has placed 4 orders for how many lots? 1,109 lots. Of course, there can be one person, there can be 2 persons or any number at 82.9250. So somebody has placed the order by putting a limit price as 82.950. So that was the limit price which is coming there. Okay, fine. Then the second one, there are 2,925 lots. Somebody is trying to buy at 82.9225. Now, if you can just see, the least is this. So the orders will be put in the order so that the first priority will be given to the topmost order because he has put higher price for buying dollar, isn't it? So his order, the people who have put at 9250, they will be putting at a higher, followed by 9225, 9200, 9175, 9150. I can punch my order at 9150. So I'll be coming at the 5th place. Okay. Then I'll be in the 5th in the queue. Now look at the other side. Those are the people who are sellers. So, there are 965 offer. So this is the bid, that is the offer. So they want to sell. They have put the order price as 82.9275. So this order cannot be matched because, that person want to sell at a 25 basis point higher, isn't it? So these are unexecuted orders which are under a hang in the stock market. Okay. So if I change my price to 75, immediately my order will get matched with this guy. Okay. Then look at this thing. So somebody wants to sell it, the last one, 82.9375. So his priority is the least because he is selling at a higher price. So he'll have, these are not all the trading which are happening. They are much more. Okay. So there are 1,72,000 orders in pipeline for buying and 1,45,000 for selling. So there is a buying, more people are ready to buy and less people are, as per the data is suggesting. Okay. Fine. So which would mean that the dollar may appreciate, okay, because there is a lot of people who are willing to buy. Okay, this is one indicator. Okay, fine. Not, you have to rely on many indicators to do that. So this is telling you there are 1,72,620 bid lots which are, up for buying, and 1,45,908 lots people are selling. Okay, and the top 5 and top buy orders and top sell orders are given to you on the screen. Okay, so I can just see that and place my order according to this. Okay, if I think that somebody is willing to sell at 9275, this is the the cheapest one. So I can immediately place my order and my order will get executed with this guy. So if I say 82.9275 limit, my order will immediately get executed because this guy is there in the market. But I have to be fast. Otherwise, somebody can do that. Okay. Or then, the next order will be 82. But new people can also come. So you can wait also. There's no hurry as such. Okay. But if you want this price immediately, so I can just choose this price. Is that okay? Is this clear? Yes. Now, so, Hanji? Limit price is depending on what price is prevailing. Okay, so I'll choose, the last traded price is 82.9325 now, and I have placed the order at 82.910. So my order is actually not, now the price has changed. Okay, you can just look at the price 82.93. Fine. Now, how do we decide what should be the price? One thing is without going into any analysis, I can just see what is the price prevailing. So I can stick to the current market price. Fine. अभी कितना प्राइस चल रहा है उसके हिसाब से ऑर्डर प्लेस कर लेते हैं. Fine. When you're suppose buying, mangoes or oranges or apples, you say, what is the price? Say 150 rupees or 250 rupees kg. You check for 3 people and say, ये सस्ता है ले लेते हैं. तो ये तो तरीका यही है. You do Reiki by just looking at 3 or 4 people. So you look at the bid and lots and just make your assessment and put the price. So that is one. Now there are some people who do some technical analysis. Now suppose I have to make a payment. I can wait for 3 days, 4 days. I expect the dollar to depreciate further in next 3, 4 days. Looking at various chart patterns, I can do also that. So we are not going to that at the moment. Is that okay? Fine. Okay. Now I can place my order. So the moment I place my order, so they'll mean order verification. Account, this is my account number. So I'm not going to place the order. I'm just telling you this is the account number. Exchange, National Stock Exchange, lot 100, order type, limit. एक lot 1000 का है. Contract expiry 27. Okay. Then contract detail, that is the name of the contract. Quantity $1 lakh. Last traded price this much. Estimated order value 82,91,000. Order validity 2nd of February. That means my order validity is only up to 2nd February. It will expire if there is no one to sell. Then at 3:30 or maybe 5 o'clock, what is it last time? 5 बजे तक होता है currency market. The stock market is up to 3:30. So at 5 o'clock, if there is no person who accepted my order will get lapse. Then I have to place another order next day. But chances are if I'm putting the price which is very near to the current, my order will get executed within few seconds. Okay, the market of dollar versus INR is very deep. There are a lot of people who are willing to buy and sell at this prices as we have seen. Okay, fine. So my chances are my order will get executed. Otherwise, if I put say 81, then my order is not going to execute it. Okay, because then the dollar has to have depreciate by from 83 to 81 or 82 point whatever is the price, 82.91 to 81. So that is not going to happen in a hurry. Okay. I can keep trying for next 3-4 days. It comes to 81.50. So I can buy it. Is that okay? Then I just go back. It's roughly around 2.25%. On the value 100 lots. Okay, I'm just going to tell you this. Okay, margin is 2.5% of the contract value, which is 83.2275 into $1,000. It will be 83 lakhs ka 2% itna aa jayega. Okay, fine. So don't worry about the calculations. They're absolutely okay, and you can do it after you have got the slides. So you can do it later on. You can just check if you want. Okay. Now the most important one. तो ये हमने देख लिए, ये प्राइजेस थे, मैंने आपको स्क्रीनशॉट दिखा दी थी इसके अंदर सारी. Then this is the best bid and offer का स्क्रीनशॉट उस दिन का जो है. Okay, so now what happens? You have booked the order. Okay, and your order is executed. You have taken a long position in dollars. Okay, remember you have taken a long position. Importer will be taking a long position. Exporter will be taking a short position, which we are going to cover next. So I have taken a long position. That means I am bullish on dollars. Long position means I'm bullish on dollar, that the dollar price is going to go up. I'm going to make money only, by entering into this contract. I have bought dollars. What does it mean actually? That's very important. That means I have bought the dollar at 83.2275. When? By 27th of February. So I have got a commitment for someone that I'll come on 27th of February and buy dollars at 83.2275 from that person. And that person has given me commitment You come to me on 27th of February, I'll give you dollars at 83.2275. So that's a commitment between the buyer and seller. Is that okay? Fine. Huh? Now the seller is actually basically an exporter or he can be a speculator. Okay. So he thinks the dollar price is going to go down further, so he's going to make money. Okay. Just wait and you'll find it very soon. Okay. Fine. So now on 27th of February 24, which is the expiry date. Okay. Now I can wait up to 27th of February, which is the last day when the contract will expire by itself. Okay. On the expiry, if I don't take any action, my order will get, expired and at the RBI price on that day. But I have this thing that I can even take positions. If I bought now, I can even sell before that. I'll explain that later. I can do it on 25th of February also. I can do on 20th also. Okay. But I'm just saying that to make a matter is simple without any confusion. I'm saying let's wait for 27th of February because I have to make a payment on 27th. So I'll wait up to normally I'll wait. Okay. Fine. So case one, the dollar price goes up. Dollar goes to 84.7275. So at what price I have bought? I have bought at 83.2275, which means I'm making profit. Okay, I bought at 83, so I have bought the dollar at 83.2275. Okay, and the price on expiry is 84.72. हाँ जी, क्या चल रहा है? नहीं, जरूरत नहीं है. हाँ, कोई बात नहीं, चलो. ओके. अब मेरे से तो माइक लगा हुआ है गले में. My wife says always to lower down your this thing because I speak at a very loud this thing. So 83.2275 was the price at which I bought the dollar. Please focus here, forget the wife. Okay. So the price is 83.2275 was the price at which I bought from someone. Okay. That means that someone is losing and I'm gaining. How much? 1,50,000. On $1 lakh, I'm making a profit of 1 rupee 50 paisa. Isn't it? I'm happy. But then I'm an importer. I have to make the payment at 84.22 because I'm just taking a hedge position here, isn't it? So what will happen? Now I'm in profit position. The margin will get released. On 27th of February, first thing will happen. Whatever margin I paid, I'll get that money back. Okay. Now, that money I'll get back, and also 1,50,000 rupees. The seller is going to pay me 1,50,000. I'm going to get 1,50,000. Okay. Now, what happens exactly in the market? What happens? Every day there is a settlement happening. Every day, if I'm making money, my money will come into my bank account every day. Okay. Suppose it was 84 point, little bit, the price is going up every day. Suppose, or sometime it's falling. It's going up, falling, going up, falling. It moves like that. So every day, my account will get either money or my money will flow out from my account. On the last trading day, what will happen? Net, my account will show a plus of 1,50,000. There is a daily settlement which happens in the stock exchange. Remember that. Every day, whatever is gain will come to my account, or if I'm losing money, that money will be pulled up from my account. Okay. So I have to maintain an account, okay, where on the movement of the dollar, the money will be coming and going. Money will be coming and going from my account. Okay. So on the last trading day, I'll see that I've got 1,50,000 in my account. So I made a cash profit of 1,50,000. The other guy has lost 1,50,000. I've made a 1 lakh profit. Okay. Fine. Just focus. Isko dekho. Now the importer on 27th of February, what happens? The importer has to make a payment. So he goes to the bank and bank says today the rate is 84.7275. Paisa dijiye. So he has to pay how much? 84,72,750 at the spot price. Assuming the RBI spot price and the bank price is same, so he has to make a payment of 84,72,000. Now the net outflow will be there. So there is a cash profit happening in the stock market, and there is a price has gone up in the spot price, so he has to pay more. So net his outflow will be 83,22,750, which is nothing but the price at which he has initially bought, which is 83.22570. So he is hedged and fixed his payment at 83.2275. So either you divide this by 1 lakh, so you'll get 83.2275. Look at the position he has taken, 83.227. So if the dollar goes up, he's going to make some profit in the stock market, but he's going to lose in the underlying position. So both taken together will mean that, at what price he bought, he has remained there only. That time the price was 83 rupees 15 paisa. So he has paid the money. His total money going from his bank account will be 83.2275. Is that okay? हाँ 1,50,000 तो देखो उसने क्या करा 84 lakhs तो बैंक को दिया. Okay, that is an outflow which happened on the bank. So he goes, when on 27th of February, the banker will say, we'll give you $1 lakh. Give us 84 lakh 72,000 because the today price is 84 point. You have to take the delivery of dollars. Okay, fine. So now he goes to the bank and he says, I want $1 lakh. Okay, he says, give us 84 lakh 72,750. We will give you $1 lakh. Okay, आज के दिन तो मुझे तो पेमेंट करनी है ना अपने सप्लायर को. So my supplier will be looking at me, where is my payment? So I have to go to the bank and say, I want $1 lakh so that I can remit it back to the supplier. Or he tells the banker to pay that $1 lakh to the supplier in USA or wherever he is. So he says, okay, for doing that, please deposit 84 lakh 72,000 with us. Because today the price is 84.7275. Now, since I have got 1,50,000 rupees from the stock exchange, so there is an outflow as well as an inflow, which is happening in my account. Isn't it? So net, what is the price I have paid? How much money I have paid? 83 lakh 22,000 on this transaction. Dono transaction, hedge transaction as well as the payment for the imports. So net, I have made a payment of 83 lakh 22,000, which works out to be 83.2275 per dollar. Is that okay? And what did I do on the 25th? I didn't pay any money on that day. I paid the margin money for entering into the trade. So stock exchange says that, okay, you want to buy a dollar, please deposit some money. So, not to the bank. First, there are two things. Today I'm not going to the bank. I'm not going to enter into some contract with the bank. Okay. I'm going to go to the bank only on 27th of February. I say I have to make a payment of $1 lakh to so and so person. Please make. He says, okay, deposit 84. This is not a forward contract. Okay. I'm buying dollars in the spot market. You told something about 1 day loss. That is why margin is taken. Again, I told you that, let's go back again here. So when I enter the trade, I had to pay 1,87,520. This is to cover a maximum loss for a day, which can happen because of the dollar and INR can change. Okay, if the dollar appreciates too much on a particular day, maximum the empirical evidence suggests that I can lose maximum 1,87,000, which is calculated through a software. How much a dollar on a particular day can depreciate? I can lose only 1,87,000 as per the calculations of the software, the mechanism which has been built by the stock exchange. इतना maximum मेरा नुकसान हो सकता है एक दिन में. 99% chance, क्योंकि 100% chance की कोई guarantee नहीं देता stock. So span margin has been deposited. So apart from span, I have to pay some exposure margin, which is there are two margins which I have to pay. So put together the margin is 1,87,000. Span plus exposure margin is 1,87,000. This will cover the 99% probability how much I can lose plus another 0.5%, which is the exposure margin. So this is going to absolutely make the trade foolproof. एक दिन के अंदर suppose मैंने एक दिन में इतना नुकसान हो गया, okay, for example, so the stock exchange will say please deposit. If you don't deposit for the money, then we are going to close your trade today itself. Okay, so next day the guy has to, before the stock exchange open, he has to deposit some more margin. So there will be a margin call. Suppose I have lost 1,87,000 because the dollar price has gone down. Depreciated. The dollar has appreciated here rather, not depreciated, because here I am saying that I am taking a long position. If the dollar appreciates, here इसमें तो मेरा इसमें dollar depreciate होगा, absolutely. इसमें dollar depreciate because I have taken a long position, so dollar is going to depreciate. Then only I am going to lose as a buyer. Okay, so if suppose the dollar depreciates, I loses 1,87,000 a single day, then I'll get another margin call. और जमा करो पैसा. Okay, fine. Now, apart from this margin money, which is made up of span as well as exposure margin, which is around 2.25%. Then apart from this also, there is a settlement which is happening on a which is called mark to market settlement, which is called mark to market settlement. So every day there is a daily settlement mechanism which is happening in the stock exchange to make ensure that there is no kind of I mean the transaction goes through without any issue involved. Okay, so the stock exchange guarantees the transaction. If you're going to the stock exchange, the guarantee is there that if you make money, you will get the money. If you lose money, money will be taken out from you through margin as well as the extra margin, whatever you're paying. So you paid this amount, and every day the mark to market settlement is happening. So your bank account is getting money or taking money from your the money is pulled out from your bank account. So you have to keep some money there in case if you lose. Apart from the margin money, there will be some money which will be flowing and coming into your account. Is that okay? On 29th of January, you can do it on any day. You can do it today. In this example, on 29th January, I have to make a payment on 27th of February. So I sat on my computer, opened up my national stock terminal, and I wanted to book, a contract. I booked. I paid 1,87,520. So that means, listen to me very carefully. I have entered into a contract with someone to buy dollars. I am a buyer, the other guy is a seller. So when the buyer and seller come together, the transactions get complete. So look, assume that there is another person on the side. He's also accepted my, order. That means, the order has been executed on 29th of January, where I say that I have bought dollar. Okay, I'll come to you on 27th of February and buy dollars from you. At what price? 83.225. The other guy says, okay, come to me on 27th and I'll give you dollars at 83.2275. If I'm gaining, you give me money. If you are gaining, I mean, I'll give you money. So either the buyer is making a profit or the seller is making a profit. So it can be anything, or vice versa. Then somebody can make a loss, somebody can make a profit. So I have entered into a contract. So it's called a derivative contract. It's a contract where the underlying instrument is dollar and rupee. Dollar rupee is the underlying instrument. Okay. On that, I have entered into a derivative contract to buy a currency pair, dollar versus and INR, on 27th of February. So this is my contract between you and me. Like, so for example, you go to a market and you like something. Okay. For example, it was a TV which was costing 5 lakh rupees. Very good TV. काफी महंगा टीवी 5 लाख का है. Okay. So you said, okay, I'm going to come and buy this TV after a month when I get my money. So I'll come, I'll buy it at 5 lakh rupees. So you enter into a contract with the shopkeeper. The shopkeeper puts in on a record, on his letterhead, he signs, and you also sign that, okay, I'm going to come to you and buy the TV on for 5 lakhs. Of course, I can go even after 5 days and give him 5 lakhs and he'll honor it. So I have got the contract to buy the TV on or before the day which we have chosen. So here also, it's like this, that on 27th of February, I said, okay, I'll buy. Of course, if when I have entered into contract, so I have to go to only on 27th of February to that guy in this. I can't go to him earlier. Okay, fine. Is that okay? Yeah. Absolutely. Because I am today the dollar I have bought, I bought the dollar at 83.2275 and the dollar is trading at 84.2275. So if suppose the actual transaction has to happen, he is going to buy the dollar at 84.725 and give me the dollar at 83.225. So he's going to lose money, I'm going to make money, isn't it? So he says, let's not go into that hassle. Let's just settle it cash settlement. आप मेरे से कैश सेटलमेंट कर लीजिए. And stock exchange is happening only cash settlement. There is no delivery. There is no delivery happening in the future and options. Only the market, all the transactions are cash settled. हाँ, suppose the stock exchange says that okay, let it happen physical delivery. तो वो क्या करेगा? He will buy at 84.7275 and give me at 83.22 or the difference will be exchange. आप क्या कहना चाहते थे? हाँ, because now you know where I don't know with where this guy is, okay? उसका एड्रेस क्या है? वो होता है कि यूएसए में बैठे कर रहा हो, हो सकता है पाकिस्तान में बैठे कर रहा हो, हो सकता है कहीं दूसरी कंट्री में बैठा, ईरान में बैठा कर रहा हो. I don't know where which part of the world he is or maybe he's in India. Okay, I don't know the other guy, okay? The physical identity is never revealed, okay? Fine. So that guy is also sitting on his, terminal and booking order. I am also booking my order. So we haven't seen any. The buyer and seller doesn't look at the face to face. बेच देगा. तो उसको क्या हुआ कि उसने कोई चीज जो थी उस दिन तो उसको 84.725 में खरीदना पड़ा. अच्छा, पहले खरीद ले वो. पहले क्यों खरीदेगा वो? हाँ, 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 84 चल रहा. आज 27 फरवरी है. आज का प्राइस 84.72 है. सो इफ आई वाज अ बायर, I'm a buyer who is a hedger. So if I have not taken a hedge position, I have to buy the dollar at 82.84.72. That's what I'm doing for my actual transaction. I'm doing the same thing now. But I'm going to get my just let me just complete this. Okay, पहले एक और आगे देख लेते हैं. केस 2 देख लेते हैं पहले, फिर समझ में आ जाएगा. ये आ गया, ये हो गया. अब केस 2. हाँ, हाँ, कोई बात नहीं. अभी केस 2 के बाद डाउट क्लियर होगा आपका. जब केस 2 पहले देख लीजिए. हाँ, अभी चलते हैं. I'll repeat this again, okay? Don't worry. Let's complete the story first of all. The story has not been completed as yet. Another one slide is remaining. Now assume the price has come to. Now second case is the price can go up also, the price can go down also. Now what happens? The price goes down to 82.2275. So I am a loser. Okay. As an importer, I am happier. As an importer, I have to pay less. When I go to the bank will say भी मुझे अब 82.227 दो. उस टाइम तो प्राइस 83 था. So I am happier as an importer. But in the stock exchange, I have lost money because I have hedged my transaction. Okay, so there will be a loss of 1 lakh rupees. 82.2275, which is the current price, and I have booked my order at 83.2275. So I'm going to lose 1 lakh rupees. The person who has sold, he's going to make money. I'm going to lose money. Margin will be released. I have to make a payment to the bank at 82 lakhs 22,750. This is my import transaction, actual transaction. So I go to the bank, I have to make it to the supplier. But my net settlement will be how much? Plus 1 lakh. I'm paying more now. So there is a two outflows which are happening, 82 lakhs as well as 1 lakh. So I'm again at 83.22. So come whatever may happen, when I choose a price of 83.2275, either whatever happens, my payment will be only at 83.2275. If the dollar goes up or goes down, as an hedger, whatever price I have taken an initial bet, that will be the price at which I am going to pay money. The total outflow is going to happen at that price. That is going to be, I'm going to pay that price on my import transaction. So I have hedged myself. So look at this. Now I'm just going to take you back again. So very important. Now listen from what we have seen. अभी क्या था? आज 29 जनवरी है. It can be 28. It can be, that is immaterial. Okay, so I can choose any day on going and hedging myself. Okay, that's my wish. So on 20th of January, I knew that I had to make a payment of $1 lakh. When? On 27th of February 2024. Okay, fine. So then when I went to the futures market, I saw the dollar was trading at 83.2275. On that day, I just called up my bank also. If I suppose I want to make payment on 27th of February, what is the price you're going to charge? If suppose instead of going to the future market, I'm going to go to the forward market. He said that you're going to be charged at 83.50. Suppose the bank is saying that we will charge 83.50 paisa for giving you a forward contract. But when I went to the futures market, the dollar was selling only at 83.2275. So where I'll go? I'll go to futures or forward? Forward I have to pay at 83.50 because there are only 10 people there, and here there are 10,000 people. So the price discovery is going to be better because where the market is in wholesale, there are bigger number of people. So chances are that price will be at a there'll be a lot of competition that, so price will be better. Normally, the future price is always better than the forward transaction. So I found the dollar was selling at 83.2275. So if we suppose I buy dollars at 83.2275, so this will be the price which will become the ultimate price for me. Today the price is 83.1450. So I have made a commitment that I am going to pay for my imports at 83.2275. So how do I accomplish that? I go to the stock exchange, I take a position, a long position, or I say I buy currency futures. Okay. So I have to buy currency futures. If I am an importer, I'm going to buy currency futures, which means I'm bullish on dollar. I'll explain that later. Suppose I say I'm going to buy dollars. I bought the dollars at what price? 83.2275. So somebody has said, okay, he has promised that I'm going to sell the dollar at 83.275. So maybe he is an exporter, he needs money, or he can be a speculator. I don't know what his business is. Okay. So we have entered into contract. Since I have bought in the first case I was going to the bank. Now I'm going to a stock exchange. There is an unknown person who's there on the side of the screen. I'm buying dollar from him. The difference is only that only, na? When I go to the bank, I know I want to ICICI Bank or State Bank of India or any other bank. The transaction is guaranteed, isn't? Because I'm doing with a bank. But when I go to the stock exchange and suppose I have bought it from someone, I don't know. So I'm always at a dilemma that my transaction will get through or not. For that, the stock exchange has a procedure. It says when you enter into contract, you have to pay a margin money. Okay? To ensure that the transaction will be complete without any problem. Number one. Number two, they do a daily settlement also to doubly make sure that this contract will be through without any nobody can back out. So there is no what do you say, that there is no loss. Okay. Fine. To any, to person. I suppose I'm making money. It's not that I'll not get my money. I'll get it. Okay. So that is called daily mark-to-market settlement. So you told money gets out or in from the bank. Yeah. So in that point of time, if the dollar appreciates, my money, the money will come into my account. Yeah. Right? If the other, then money will flow out, not account. But I have already paid the margin from that only they will take. No, the margin is a separate. Margin is to cover a 1 day loss, maximum loss it can happen. So that is over and above the money which will be going in and out of my this thing. Based on every day price of the dollar, the future price of the dollar जो चल रहा है stock, उसके हिसाब से वो पैसा आता जाएगा जाता जाएगा. और finally the RBI price will be considered for my settlement, of the final settlement will happen on the RBI price which RBI announces the price. नहीं. Margin is on 83.2275 into $1 lakh into 2.25%. Is that okay? So that will work out to be 1,87,520. You can do that math if you want later on. Is that okay? That is immaterial. That's just the mathematics. Okay. आपका 83 lakhs का 2% कितना हो? 1,60,000 तो हो ही गया ना, तो वो 1,80,000 हो गया क्योंकि 2.25% है. अगर 80 lakhs होता उसका 2% कितना आता? 1,60,000. So it is 1,87,000. Is that okay? Is it clear? So now by entering into this contract, I am ensuring that I have to ultimately pay for my imports at 83.2275. Okay. Now it can happen the dollar may go up or dollar may go down. If the dollar goes up, I'll get money from the stock exchange, but I have to pay more money on my real transaction. So put together, my outflow will be only 83.25. Or it can happen the dollar goes down, so I lose money in the stock exchange, but since the dollar price has come down, so I'll be paying less, but I have to pay more money in the stock exchange because I've lost there. So put together again, I'll be at the same place of 83 point. So it's a complete hedge. Is that okay? Have you got it, Suraksha? समझ में आई नहीं? हो गया ना margin में, तो margin was just a deposit. Margin I'll get back on the expiry. The margin will be paid to me. It's just a kind of a backup. हाँ, ये सिर्फ आपका कोई backout ना करे. Okay, so there is no counterparty. I was just looking. There is no counterparty risk in this transaction. Okay, let me the word I got it. It's called, there is no counterparty risk when you're doing your transaction from the stock exchange. Neither it is there when you do with the bank. When you go and take a forward contract, there is no counterparty risk. Similarly, The counterparty risk has been eliminated by the stock exchange by having a very foolproof system of ensuring the transaction are through on the stock exchanges. Okay, बताइए. हाँ, वो तो एक आखिरी दिन तक वो मेरे अकाउंट से तो निकल चुका था, और बाकी मेरा स्टॉक एक्सचेंज के पास 1,87,000 पड़ा, वो भी मुझे दे देगी. नहीं नहीं, वो तो हर दिन के दिन भर दिन हिसाब होता जा रहा है ना. एवरी डे दैट मनी इज बीन टेकन आउट. देयर इज अ फ्यूचर प्राइस ऑफ द डॉलर एवरी डे देयर विल बी अ प्राइस इन द स्टॉक एक्सचेंज. सो ऑन दैट बेसिस the difference will be calculated. Either the money will come to in my account or come on the last date. It is the RBI reference rate which is considered for settlement of the final settlement. Now remember this, when you are doing the stock market, unfortunately you haven't done your derivatives in the stock market. So stock market में भी क्या होता है, there is a future price of the stock as well as there is a spot price of the stock. Reliance today is trading at say 2,800 rupees, suppose in the cash market, but in the futures market it may be trading either a little higher or lower. Okay, so जो सेटलमेंट होता है वो फ्यूचर प्राइस से होता है. ओके, वील अंडरस्टैंड दैट बिकॉज मोर. अभी तो हमने आपको थ्योरी तो बताई नहीं है, थ्योरी आगे चलेगी, आपको समझ में आ जाएगा जब पहुंचेंगे थ्योरी में. व्हेन आई एम गोइंग टू डू द थ्योरी यू विल अंडरस्टैंड एवरीथिंग दैट विल फॉल इन योर माइंड. ओके, वी आर नॉट गोइंग टू एंड अप हियर.